Welcome to TradeTheMBI.com. This is John. This report is for the 17th of April. Scroll right through the numbers early. No surprises as to what happened. We ended up with a nice move to the upside, and the continuation was expected. We did get quite a bit of return, which meant that if you had missed the opportunity and knew our expected bias, you had an opportunity to jump in on the retrace all the way back to gap fill. So forgiving market at this particular point, and that's typically what happens when they're working it out. Unfortunately, when I say working it out, they're working out the turnaround where there's a buildup. We can see that from the readings as we get to them here after finishing the Dow. And all that lovely green in there, which is always a problem when you get too much of one thing. Today we've even got a little bit of the cyan tilting up. Green's still rising, so that's okay. You get the perfect crossover, but you are at the potential that if this continues and we get a slight fade in the green, you could start to see the beginnings of a retrace moving on right here. So it kind of becomes a pivotal day. You're not super overbought, but you've moved up enough to where you could get just in this flat zone where the more cyan colored ones just can trade across and we get some weakness. And that's because the early momentum has already been taken care of when you force shorts covering in that. Well, they're no longer around. Now you're looking for additional buyers. I guess we could plop in and see what MACD buyers are doing. Yeah, so they're still going to miss that boat. So we potentially have a little bit more to go because they won't really want to sell heavy until they get their buy signal. Always good to look at that. NQ, yeah, not as great with that. So you just don't have the blending, and that's why you get a much weaker performance out of the NQ. And this is very easy to see when you see it in this context because you're very different with the green above the cyan versus the S&P, but you just don't have it here, and it's just going to create a much weaker signal, which is going to point to tech stocks, things like that you've got. They're not going to fare as well as some of the other peripherals. So it just makes it easy to do your own version of a rotation as to which market was the most successful, and that happened to be the Dow here. Had crossed well above, shot very nicely, and in fact you may even get red above cyan, and we may even move into a new zone. And this is particularly important because at this point you have a buy crossover in the death zone, meaning these rarely do very well for a run. You would definitely need to see that cyan move under it, but move up of the cyan, particularly on the day, would indicate that you're probably going to pull back. So this is kind of a significant Thursday. A little bit. It can lead itself towards a more expanded up move, which is currently what the situation is, or you start to fade off pretty fast. And then you get ones like this USO here, and nice dip, turnaround. And this is where I typically want to take a look at my option chains. Let me see if I can pull some of those up. Since you don't really want to get caught, 37.50 potentially for the next week would be interesting. 47 cents. Give you a little bit of a cushion. Expectation on a little bit of the turnaround there. You still have decent momentum with that and the steel moving lower. Opportunity to collect some premium when you're really not expecting a whole lot of movement. GLD, this will be interesting when we start to get the next red turnaround. Nothing at this particular point. X, likewise. Okay, so we've had the sell. It's held up pretty well. You're starting to get a little bit of a turn. This is one of those, again, where close somewhere right around 27. You go over and grab yourself an option chain. You look at next week's and you say, okay, I can get 65 cents, 61 cents for the 27 strike going into next week. Not a bad premium when you're still in a sell signal, yes, but an improved one, and even a continued slide. So it just gives you a little bit of room for margin of error. I love it for acquisition, particularly CLF. CLF's not ready yet, though. Question is, do you get enough premium? Now, when you look at something like that and say CLF, okay, maybe it's ready, maybe it's not. Still clearly within a sell below the red line. So look at the 78 minutes, see is it turned around yet? No. It's close, but not quite there. You'd like to see the green coming from the red below, or you'd like to see that red at least turning up and at a high pivot point with steel or maybe at least the cyan dropping. It's not there yet. Could happen in a few bars, but that's where you just at least take a look at it and think, all right, maybe somewhere in the 1850 range. Right now in the 60-cent range. Well, gosh, if it gets down to that 1850 or a little bit lower, getting 80 cents or so could be very attractive going into the next week. Nice cushion. WLT from its 78-minute, we were expecting a little retrace all the way back down to the 75 range. Held up pretty nicely so far. That steel in the safety zone been very good. Kind of formed a little bit of a cross there. It'll be interesting to see if we get a continuation of cyan above the green, which would definitely lead to that. I was talking about a strangle potentially, those that already have shares of it at least. Particularly if you sold last week's $8 or something like that, and you have the shares selling call, $8 call, as well as another $8 put. And you're just selling time and premium, and at a net credit of 63, 64 cents. It's pretty impressive for an $8 stock when you look at it from a percentage standpoint. So there are ways to play very conservative that just don't require a whole lot of capital. But I know a lot of people just don't like to think about some of these options. Then there are simpler ones like this, where you get the nice little 50K buy signal came in back over here in the crossover. It was actually even before the white signal right there. It was the open at this bar right here at 18.19, and here we are 20-something points higher, and even a little bit higher. You can see we got the positive extreme. Yeah, would I be more cautious at that particular point? More likely for me, like I did, I shorted it and looked for a little retrace, and if it turns around and flips, I would buy it back on the upside, and that's typically how I treat these peak moves. Tends to be fairly effective that way, but this is still pretty decent here. I mean, look at how low the cyan is below there. It's going to take a little work to get it above the red-white, and you also have steel dipping all the way nicely here into a safety zone. So, at least for the 50K at this particular point, modest retrace. Potential is you have another opportunity for a new buy signal. What are we looking at? Minus 3.5 for the market in general. That's minor. But you can see, compared to these declines where you have the big gap here, it's closed off. You have the red having risen beautifully above the zero line. Easy trade. And a big difference between the momentum of that versus ones that come up just to the -7 or don't even make it to the zero or barely get to the 0 point and start to turn over, and those become effective shorts. And so you get to really start to see it clearly when you pay attention that way. Let's look at the intraday. All right, here's the intraday. So we had the nice continuation run up. Gosh, we should go all the way back to the beginning of that green. See where that green started, because it was a very effective trade. People tell me they have a hard time following the simple red and green, and you just keep scrolling back, and it's like, okay, here it was. Goes all the way back to here. That's what, down at the 18, well, right around the same point that the 50K bought. I think I clicked too many times there. There we go. So the first green popped in 1821, and you ended up with a little bit of red on the crossover there. But it was still a very positive situation because you had the cyan below the red and white. So that was just a function of a tiny little dip. Even if you waited to there, you got 1822. And that went all the way until first short signal right there at 1850. So pretty hard to argue with that. Once the short signal came through, stayed in. Even on the pop, you expected that we were probably going to retrace those lows. We did that, but then we did it on just regular red, which meant that as soon as you got a buy signal, and then of course you get the buy signal, and oh no, the market, it starts to go down lower. But then again, formed another beautiful pivot right here, higher extreme, secondary opportunity to buy, took off nicely. Then you went back and forth. So overall, I think it was a very decent day. Let's take a look at some of the alerts stocks. We'll start in reverse order to what we did the other day. So Facebook, you know, still was pretty decent. It finally started to get a rollover here. You just have to have that green move over. So just kind of flat, no real shock with that. Now let's look at one. Well, we can look at FAS first, and then we'll look at Baidu. Baidu was one that kind of shows the transition, and this one's close. So FAS just about to cross over. Nice rise in the red. Of course, you'd like greater separation on that, but still within the deep red, so the potential is for this to retrace. So this becomes critical as to whether or not you get a pivot back up or the green crosses. Even if the green crosses, I'm going to be looking, because I'm in the deep red, for a potential spider on that one, and the fact you still have a dip below the red line right here that will need a retrace, but overall still within buy configuration. You just have that upside pressure on it, and that's going to depend on the market too, is whether it turns around. But see, here was the Baidu where closed the gap nicely, had beautiful rising red. We talked about this one being a little bit better than the others. The first green pivot going along, still had some shakeout potential with it, but crossed over now. So you should start to see stronger upside movement. If you don't see stronger upside movement, that's a problem, because then you're looking at a situation where you have a clear buy that could fade off. Now the red's dipped slightly below, but you're just about to move to a new zone. As you dig in and carry through with this, it should give you much greater legs, at least, to the trade, but at this particular point, still fairly in between. So you look for dips to take advantage of them and make sure that your intraday setups follow it. And that's easy enough because you get the 15-minute Twitter alerts. So here was a good Twitter. Now see, that's a nice move from the red separation. About to cross here, so these two are finally blended. Key is, if you get a pivot going back up to there with the cyan, then this is going to go down and retest the lows. You already are near an overbought situation. So and it's weird because a lot of these that look like they were about to start some decent moves, they don't look that great. I mean, this is ugly from Tesla's standpoint. I don't want to be buying that. Not at all. There's nothing attractive about that setup there. Maybe it blows out, but that's not what I want to be looking at. PCLN, nice move back to the center of it, but again, it's got to cross over, and you would need to see the red. This is pretty flat. More likely than not, that's going to pull back quite a bit and retrace into it. And that's typically what happens with these kind of moves. They bounce out and then just fade, because you just don't have that crossover. So I'm not particularly excited about any of these jumps. Netflix, likewise, look at that separation there. You got a lot of work to do to get that to smooth out. In fact, I can start to move that box just that much further over. Not even in there. Let's see about Google. Maybe we get something better there. Yeah, see, look at the spacing is huge. So yeah, you get the fine move, you get the basic crossover, but not an indication yet. And to me, I'd be a little more excited if the steel were heading lower. Was it 556? So, holding up fairly decent. We'll see how it fares, but you're gonna have to get considerable movement, and it's just not terrific. Amazon getting closer. I mean, at least they're all coming to a peak point, but that peak without crossing over dramatically, you would see these really bounce to the high side to get up there. You got to watch that cyan tilting back up, and that would lead to a whole new downturn. So I'm not trying to be pessimistic. I just want you to be aware that there's the potential. And a lot of these, like, look at Apple. What did I say about Apple? Yeah, you got your little buy. This says ugly, not likely to do a whole lot. If you don't pay attention to that, you're going to be wondering, oh yeah, I'm buying weekly calls. Well, if you're buying weekly calls in a setup like this, you're just throwing your money away. If you want to create a spread or something like that, fine, but you're just likely to go sideways with this kind of signaling. That's just too big a separation. And that's just the reality. And even if you missed and it did pop up, there's still not a configuration you want to trade. So it's about as easy as I can make it. Anyway, we'll talk again tomorrow. Look for me on private Twitter feed, StockTwits. As always, trade well.